Hi everyone, welcome back to Virich Podcast. In this session, we are going to discuss about the type of business which the company will be doing. So, the company falls into three of these categories. So, the first category is products which the company sell will be to the consumers or the people. So, the second type of business will be supplying to the companies, and the third type will be doing projects for the government. So, each and every type of business has its own merits and demerits. So, can you tell the first one, which is the consumer facing business? Most of the companies will be the consumer facing business.
Okay, there are two types of businesses. You have manufacturing and you have services. Two sectors. That means you make something physically, you're making something, you're manufacturing. Otherwise, you're providing services, like IT services. So you have two branches.
Yeah.
First, a company. Then under that comes what you spoke about. So I could be manufacturing a product which I'm selling to other businesses who are selling it to consumers or other businesses. Famous company of that is Reliance. Like Reliance Petrol. What they do is they bring the oil into India, refine the oil, then sell it to other countries and other companies. That is B2B. B2C are your iPhones.
ITC also.
ITC, iPhones, anything you want, Nestle, where they're making a product and they're selling it directly to customers. The third is, which is the worst kind, is where they're selling their services or products to the government.
Power sector will come under this.
Correct.
Are there any type?
Mining, coal. Main customer is the government. So these are the three sectors. Now, if you look at it, which is the best sector to invest in is a question you will be asking. Well, there's not a best sector. One sector which I will definitely not invest in is B2 government. Business to government I will avoid altogether. Not that it's a bad business to do, but it's a tough business to do. You know how the tender process works. You can't just go get a government order. The government will put in the newspaper, we want one turbine.
To get the project, it will be taking months.
Yes, for the dam, we want one turbine. All of you are interested in quotation. And you know how the government works. I don't need to get into the nitty-gritties of it. Then, after you do the work, getting your payment is also very difficult. So, taking all that into consideration, if I've already started a business, like I'm inheriting it from my grandfather, they don't have a choice. I have to see what to do with it. But if I, as a new investor, going to put my money into it and invest into that business, I would avoid that, knowing how difficult it is. So that is the main reason I would avoid it. So next, these two. You have B2C and you have B2B. Here, it gets into the notion of, again, the famous Philip Fisher rule of what is the circle of competence? What do you understand? As far as oil refinery is concerned, you know, it's a pretty straightforward business.
Price is capped.
It's all dependent on petrodollar. So as dollar fluctuates, the company's input cost is fluctuating. But the advantage for Reliance is they're only processing it here and they're exporting it back. So they get paid back in dollars. So let's say they buy it when the dollar dips and then they're selling it when the dollar goes up, they can make a spread on these things. So if you look at it like that, it's not a bad business for Reliance. Then you have to study the finances and things, dive into it. But what you must realize is all B2B companies will not look flashy. They will look very boring because they don't have a customer they need to advertise for. They don't have to build any brand. They don't have to worry about any image. And this is the basic problem for Reliance. Reliance grew up as a company doing that. Made a lot of money doing that. Made their investors money doing that. Then they wanted to pivot into doing B2C. They have no experience in it.
Reliance Retail and Geo.
They've been building it. There's all ideas of Mukesh trying to leave the petro and move into other services and other manufacturing. The textiles is manufacturing and trying to sell it. First he was manufacturing textile and selling it stock to other companies. Other businesses who are making the shirts and pants and then selling the shirts and pants. He said, why? I can make it myself. Every single thing Reliance was doing like that, Mukesh would say, why? I can do it myself. Like Amazon style. Why?
Amazon Basics.
Correct. Like that Reliance Basics is what he's trying to do. Because all his whole Geo platform is that. Where he wanted to make his own phones and sell it cheap. Now everything he wants to do himself and I'll give it to you. So he gets a bigger margin. He can make more money. So this is the problem. So historically companies which are very good B2B find it very hard to do B2C. This is even true for Tata Motors, if you look at it, they are making trucks and buses. Who are the biggest customers for trucks and buses? Either a business,
Logistics company.
yeah, logistics company which need lorry, right, or moving sand quarries. Those guys, transportation companies will buy trucks. Buses will also be government, or again transportation companies and the Indian Army. So these were their customers. So they never built any brand. Tata Motors wasn't any brand. Nobody knew about it.
Okay.
No one spoke about Tata Motors. Yes, Tata company. That's about it. And even if you see their product designs, it was nothing flashy. It was functional. And their customers did not care about fancy. The customers want reliable, safe vehicle to do the work. Then they said, okay, Ratan Tata had the dream of making the Nano. At that time, they pivoted.
Okay.
They had some tie-ups with Benz, and they tried the Nano, and they've been working. Now you're seeing they bought Jaguar Land Rover. They changed the complete team. So through that process of innovation, now they're slowly becoming a B2C, and they're seeing success in B2C.
Yeah.
So that's why they're saying we'll break into two companies, where the old B2B business continues as is, and this new B2C business is separate. And this. So this happens. So as an investor, you have to see these kind of pivots. Are the company able to transform itself and communicate? And that's when I would be wary. If you're doing B2B and you're doing very well B2B and you continue doing and you stay in that circle of competence as a company, I don't mind that. I'll invest in that business as long as everything else checks. But if the owner of the company is having dreams of doing this, they'll lead to problem. And the same is true for B2C companies. Companies which are very focused on creating, hardware and services which are used by customers directly, right, will be very flashy. And there'll be wide, high margins on these.
Yeah.
This kind of idea will not sell in B2B. Like Apple, it's Vision Pro goggles. They're trying to now sell it to companies, saying you can use it for car design. You wear it and you can do augmented things. It's not really sticking. Because it's not a B2B product. It's a B2C product. It has all the bells and whistles and things consumers like. A business customer doesn't need all that. He wants it to be functional, easy to use, easy to service, and cost effective.
Okay.
It has a whole bunch of things he'll never use. It's like if I am running a factory, I want a very good reliable phone, but I don't ever need a camera on the phone. Spending a lot of money having 3 cameras on it and it can do depth of field, and it's of no use to me. I would rather have a phone which will save me half the cost but doesn't have all this, but has the other functionality and reliability of the other iPhone. I would prefer that.
Okay.
So the company's mindset switches from a consumer to a business. That also is a process of evolution, and it can be tricky. So this is to keep in mind as an investor. When you see your company pivoting, you must be aware of this. And it's true in ITC's case also. ITC's case has been successful in doing what you call FMCG products, right? For the simple reason they were selling cigarettes, which was a B2C. And they followed up with ITC hotels, which is a B2C. And all this fast moving goods they're doing is also B2C.
Yeah.
They're not really doing B2B.
So they are stronger in that.
Yeah. So all the businesses he's building on are continuing to be on what he already knows. He's adding more products, tapping wider markets, but they're all customers. While companies which try to switch will always find it difficult. This is something to keep in mind.
Yes, sir. So I hope that this video was informative and you had some knowledge about the various types of business and how the company operates in each categories. So if you found this video useful, please share it with your friends whom you think it will be helpful for them. And please subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.